We have Larry, who's in Red Deer, Alberta. Hi, Larry.
Good morning. Thanks for taking my call.
You're welcome.
My question is on LyondellBasell Industries in the United States. I purchased this a couple of months ago, and it seems to be doing quite well. Should I continue to hold or increase my position? That's my question for you. I'll hang up and listen to what your guest has to say about it. Thanks you.
Larry.
Larry, thanks very much for your call. Lyondell has been one of our top picks, actually, on BNN, I think a couple times in the last year. So at Barometer, what we try to do is focus on themes that are in play in the market, where we're seeing expanding breadth, where money's getting put to work, and where there's some kind of secular change taking place that could lead to a multiple expansion or revaluation of an underlying sector or stock.
This is a record high today, by the way.
So Lyondell's in the chemicals industry. Their end markets largely are auto and the housing market. And their biggest input cost, or about their biggest input cost, would be natural gas. So in the U.S., we know we're going through a boom in oil and gas production, and that's a big win for several industries, the chemicals industry especially, because if that's your biggest input cost, and you're getting gas prices in the U.S. that are a fraction of what they are in Europe and the rest of the world, then you've got this great competitive advantage. So Lyondell's doing remarkably well in their North American businesses. At the same time as you're seeing improvement in their end markets. So their costs have been down, their end markets are getting better, and the cash flow generation has been extremely strong. They will probably build additional capacity in North America, because this is a long-term theme that's going to play out. And they're not afraid to pay out, significant dividends along the way. They're buying back shares as well. So this is one, we like the end markets, we like the cost structure, we like the sector as a whole. You could almost aim a gun at the chemical sector and make money. Methanex is another that's benefiting from the same theme. And it's one that I would continue to add to.
All right, David. Then next up is Monaco in Toronto. Good afternoon.
Good afternoon, gentlemen. A very informative show.
Thank you.
My question is on Facebook. Recently, Zuckerberg sold some, effectively being a secondary offering around 55. So I was wondering what's your opinion on why he sold before the earnings report, when he knows the earnings would be good, and now the stock is up at 70 plus. Thank you.
Great. So to be clear, I think that there's much more to take away from management buying shares than selling shares. Because in any exercise, there's lots of reasons why people sell shares, not the least of which is because they have an enormous concentration of wealth in a particular company. And it's not to say that they don't believe in the future of the company, but I think that you have to recognize that anything can go wrong. And I would suggest to any investor who had almost all their net worth tied up in one company to take shares off. We own Facebook as a firm on behalf of our clients. We recognize from a risk-reward perspective, there better be very good opportunity for the risk that we take in this. But there's a very clear theme of money working its way not only towards media, but towards social media. And Facebook is being very successful in monetizing their mobile platform, which ultimately has lots of legs in it. So this is, one position in a portfolio of 40 or 50 securities. We know things can go wrong, but so long as the group continues to perform well, so long as they continue to beat estimates, the most recent quarter came in about 15% ahead of estimate, you could see the multiples for this group continue to expand. And I think it's remarkably positive that after bidding $19 billion for WhatsApp, the stock didn't miss a beat. That tells you there's remarkable demand for the shares of this company. And I think that there's lots of opportunity going forward. So,
and would you say that the WhatsApp acquisition, it was only $4 billion in cash, the rest in stock, but also the fact that it's almost as if they don't really care what they're paying because they think the synergies are just so fantastic and they have so many users, added users here.
Right, you look at some of these deals and at some point somebody will do a bad deal and it will be at a time when the market's not very forgiving and things may look different. But you look at what Google paid, for instance, when they bought YouTube, and it was a lot of money. but you look at how valuable that YouTube platform is. You don't necessarily know what the WhatsApp platform can turn into, and they may well have a better idea of where that platform's going. In the meantime, if you're in a strong market, you better own the things the market cares about now. And as a growth-oriented investor, there is very good growth in this industry and a time when there's not a lot of growth across the board. So for those growth investors, they need to be focused in these stocks. And so you pick your spot. Where would you exit if it started to go against you? And recognize it should be a small piece of a portfolio, not a big piece.
Okay, David, a short pause here. We will get to your past picks right after this. You selected them Valentine's Day last year, and they're all to the upside, and David is still holding them. Stay tuned.